I want to spend a little bit of time talking about Melbourne because I want to put some context around this. Melbourne is a challenged market currently because of the settings around the cost to hold your property, around the restrictive, regulatory settings around rental conditions and laws and so forth.
Basically, the ATM for the state, Ben.
Yes, that's right. There's no doubt that they're looking at property investment. So I've been through a few cycles. Bryce and I have been through a few rodeos before. We know where this normally lands is once the regulators and the governments work out, actually, we've cooked the books and we've cooked the market, they will retreat from those positions. And ultimately what you'll see is a rebound in values. I mean, you've got to think about Melbourne and Sydney. You know, they are our gravity centres. They bring in the best and brightest in this country, and those people can come and earn really good. They are our knowledge centres, as you know. All of the demographers, the Bernard Salts in this will tell you that you build those big knowledge centres, strong universities, strong economic drivers. That will be true. The problem we have is Melbourne's got a sentiment issue from an investor's point of view. So that's that 10 or 20% of buyer demand isn't there. So I say that in the short term, but if you're a smart decade investor, what you've got to be thinking about in Melbourne is you're buying counter-cyclical, but you've got to be prepared for a potentially flat growth or maybe even a contraction over the next couple of years. But you get 100% of the upside if you're counter-cyclical, and you're not talking about a market that's small and susceptible to one or two economic risks. You're talking about a completely diversified, fully integrated, one of the biggest financial centres, top 105 cities by population globally. That you've got to remember that. So don't think short term when you're thinking about buying in Melbourne. Be greedy when others are fearful is going to be our message for the first half of this year. But also be mindful that you just may not get any solid growth over the course of the next couple of years. And then it's about the government decisions in terms of how they manage their debt, and some of the difficult decisions that they have to make is going to then talk about the next 5 to 10 years and beyond. But
the upside there, Ben, is you can get position in the type of property you're after, and also around the fact that the increasing yield story, because you've actually had a look under the bonnet on some of the properties that have moved from the market from investors. I think that's good intel to share here, because that gives a bit of an insight into what that tenant pool, what that property for tenant pool is going to be like, which will kind of give everyone an idea of where that pressure is going to come from.
Well, yeah. So, in terms of, I'll have to pick another story for what's making property news because I'll share it now. But yeah, so the bond registrations in Victoria, I've been watching very closely on the back of the major reforms that have occurred, and also the recent increase in land tax and the consequences of the investor. And so investors, the small business owners, are basically, some of them are saying, that's it. I'm divesting of one, maybe more, of my properties in Melbourne. So we've seen in the latest data released, which was up until the end of September, 7,500 less rental properties available in the Victorian market. And that's around 6,500 in the Melbourne market. So to that point, and I know currently I'm reviewing one of my properties in Melbourne, that rents are definitely going higher on the back of that demand story. So if you're an investor who's coming into a challenged market, it's not a bad thing when you're thinking in those 5 to 10 and beyond years that you're going to enjoy some improving yields, and then ultimately on the back of that, improving capital growth over the medium to longer term. So that is Melbourne's story. That sort of rounds out.
Too, Ben, if you've got 3 million people that are coming into this, our population will grow by another 3 million by about 2028. They got to go somewhere. Some of that will go to Melbourne. That will be underpinned. Yep. You've got to, as you said, the population of Tasmania coming into this country in terms of migration. The first 5 years they generally rent, but their goal is, as we've always said, is to take a selfie at the front of their house to say, look, this is the reason why we moved here. So it's largely a story, to your point, is the Victorian economy is the challenge. But I think with people being able to, particularly knowledge workers being able to work with a laptop, they might be able to get a role that's sort of across borders as well, whilst living here as well. So I feel optimistic about the baseline for Melbourne. But to your point, I think I think it's more about increasing yields, getting yourself jockeying for position, making sure you get under the headline, because we always teach people to get under the headline and be very specific about the markets where you actually position yourself for. And then if you zoom out to 2030, where do you want to hold real estate? Well, we've always said try and have one in Sydney, try and have one in Melbourne. And if this becomes your opportunity to be able to do that, and your cash flow allows and your situation allows, who knows, might be the reason for doing it.